Despite a stronger than expected Q3, underlying weaknesses persist for Home Depot, and we're here to unpack what this means for you and your investments. Let's get started. If a rising tide lifts all ships, then a falling one can sink them. And the falling tide is what Home Depot and other retailers are facing. Thomas, that is what you opened your article for MarketBeat with. That's what we're here to talk about today. So Home Depot had a fine quarter as far as business goes. It produced reasonably stable revenue and sufficient earnings, but revenue is down compared to last year. So fill us in about these results. Tell us, how do these results compare to expectations and key factors that are influencing performance here?
Yeah, Home Depot and other retailers are in this weird situation where they're expected to contract this year, and that's got them in downtrends or trapped in ranges. But on this sequential basis, as far as Q3 went, especially, they've been outperforming. So that's been producing some near-term pops in the price action. But at the same time, they're also lowering their guidance. So reducing the guidance is really an unstable foundation for the rally. You had this near-term pop on the strength that puts the stock higher, but then the guidance undermines that strength and sets the stock up for a fall. And that's what I see happening here with Home Depot. I mean, the stock could continue to go higher, but I just don't see it exiting its trading range anytime soon. And there's a real risk of it retesting the bottom of the range before this movement's over with.
All right, so with that, Home Depot CEO Ted Decker had made a comment about consumer behavior. He said that people are noticeably shifting from large ticket discretionary items to smaller projects. So how might this impact Home Depot and the broader retail sector in the coming year, Chris?
Yeah, well, I mean, if I had the answer to that, I'd be making a lot more money. This is the real conundrum that's facing investors. So you've got evidence that consumers are slowing down and or shifting their spending habits. That was kind of anecdotal over the summer, but this latest round of earnings reports are confirming that there's a slowdown there. So on the other hand, consumers are still spending. And the big if, and it's a ginormous if, is if inflation is truly regressing to the mean, meaning the rate of inflation, we're not in disinflation yet, but the rate of growing inflation is actually moving down towards the Fed's preferred 2% target, then it's possible that consumer spending can increase. You know, we saw just in the last CPI and the PPI reports, they came in cooler than expected, largely due to lower oil prices, which meant lower gas prices. When consumers feel that they're spending less at the pump, they may be inclined to spend more in other areas. What does this mean getting back to Home Depot and other retailers? Well, right now, retailers are fighting for every dollar that they can fight for, and those dollars are harder to come by. So I think the stores that are going to tend to do better are going to be the ones that go direct to consumer as opposed to the big boxes. But Home Depot has an advantage in the sense that even before 2020, they were engaged in this omni-channel initiatives, things like, buy online, pick up at store, and other things, home delivery. So Home Depot kind of had an edge there. Lowe's is catching up a little bit, but Home Depot still had the edge there. And that may serve it well as consumers are looking to spend, but may not be looking to go to the store and spend.
All right, well, let's touch on Home Depot's capital returns here. How have they managed despite challenges in the market? Are there any key indicators maybe that we need to note of its financial strength and stability that investors, again, need to take note of? I mean, I guess what I'm asking is, are there ways in which Home Depot's current situation and financial indicators impact its ability to deliver to shareholders?
All right, so this is why Home Depot was a buy and hold stock and an excellent buy on the dip target candidate. Its business is sound. I mean, it contracted a little bit, but it's still doing well. It's making plenty of money. It's also gaining some leverage for when the consumer economy rebounds. Speaking to what Chris was saying before, there are certainly shifts in the consumer, and we see that in Home Depot's reports. Less big ticket, more small tickets. We see that in Walmart and Target, less discretionary, more everyday items. But what this means for Home Depot is that their capital return program is sound and solid. Dividends and buybacks are reliably safe. Dividend growth should continue. I wouldn't expect to see a slowdown in share repurchases. And something I thought about earlier today, writing a different article, is with people expecting the Fed to start cutting rates next year, there's an opportunity for this company and others to begin repositioning debt, reducing their debt load, their debt requirements, freeing up more cash flow, and accelerating capital returns. So Home Depot for me is definitely a buy and hold candidate for income dividend investors.
Okay, big question.
Right. I mean,
here.
this is for those types of investors. I mean, it's like God love blue chip stock, because that's Thomas is right on. I mean, you're investing in a stock like Home Depot, you're looking at the total return. The dividend yield is around 2.7%, and that's kind of ho-hum for some investors, but you have to look at that in the context of the bigger picture. Now, this year, the stock's flattish to slightly down, I think, at least it was when I last checked. But over the past 5 years, Home Depot's been seeing like a 16% average stock price growth. So if you've been holding on to the stock, you're fine. Even if you haven't been reinvesting your dividends, you've made a nice gain on Home Depot over the last 5 years.
Sorry to interrupt you there, Chris.
No
But
problem.
moving along. So to the big question here, is Home Depot moving higher from here, or what's the situation?
Yeah, so like the chart looks good right now. This could turn out to be a solid trend following signal, but I don't think so, simply because of the way guidance is unfolding that undermines the forward outlook. So even with the post-release pop in the price action, the market is still below critical resistance points. It's within a trading range. It's got a long way to go to hit the top. I think this market will continue to be range bound and may put in a lower high with this current pop. Today's action is showing a nice little inside day, which is an indicator of a market peak. So I think that we'll see some more range bound trading, potential for another pullback. And I think that we'll see a really, really solid trend following signal sometime in mid to late 2024 or early 2025, once we get through this inflationary period and once we know for sure that the Fed is or is not going to cut rates.
Yeah, we've been talking on this video a lot about the long-term investor, and I think obviously there's a strong case here for saying if you own Home Depot, you're holding on to it, you're adding on every dip and doing that. As for traders, I mean, there's a defined range. I can see it on the screen. Some traders like that, some don't, but there's a trade there. I mean, it's just pretty defined where your entry point is, where your exit point is. So, it just depends on how you want to play Home Depot, really.
All right. Well, thank you everyone for tuning in to explore this evolving landscape of retail and Home Depot's resilience in the market. For more updates and investment tips, go ahead, subscribe to our channel. We'll be right here at Market Beat to help you stay informed and invest wisely. Thanks, guys.